Hey guys, it's a market update. We've got a lot of macro data to get through, a lot of economic data looking at this because we're at a crossroads and it doesn't feel like we want to go right yet, which is strange considering that, we're at an all-time high. What has happened is that we've broken out of this pattern, super bullish. Like if you're just looking at this chart, it's amazing, right? You've got this huge uptrend, higher lows. We literally just broke out. Now, last video, I said I didn't know whether we're going to come back and test this level or just go higher. Well, we're testing the level. You can see this right here. This resistance zone broke through that. We're now testing that again. Now, for a play out on the bullish side, you test this level, you actually meet support here, and then everyone realizes we're going higher because the resistance is now turned into support. You can see that on the daily as well. We went right down to this level here, tested it, and getting support here. So from a technical perspective, just looking at the price action, it's good. But it doesn't feel like we really want to go yet. It doesn't feel like the market's there. It's not any of the data. It's like the sentiment of traders, sentiment of price action. It doesn't feel it's quite there right now. And so we need something to happen. We need some sort of exposure event or something in the news to flip, right? I don't know what that's going to be. Doesn't feel like we want to go right now. But just from a technical perspective, yeah, it is amazing price action. But just doesn't feel like we want to go. If you do trade crypto, check out Bybit, deposit bonus in the description. If you're a new user, click that. You can get a deposit bonus up to $30,000. If you can't trade on Bybit, not every country can, check out Apex. You can trade directly from your crypto wallet. You get a fee discount via that link as well. What the bulls are saying right now is that the market isn't overheated and valuations aren't too stretched. And a lot of the data isn't typically where it would be, where you get a top of a cycle. And I mean, it's an observation, so it's true, right? This cycle seems very, very different. And I think I have a reason for that. The central bank is out the game, right? In previous cycles, basically the central bank controlled everything through money printing and interest rates, and that was it. They're out the game. They're completely out the game at this point. It's all on the fiscal side. It's all on the policy side. What the Trump admin wants to do, and what they've said consistently, is they want credit creation, money creation, to get away from the central bank and diversify it and decentralize it into community banks, smaller banks, world banks outside. That's what the trade deals are about, getting Japan and Korea and the other allies of the States to create credit through their investment banks and the world banks and get credit creation from them instead of from the central bank. It's a different cycle. It feels different, right? And I think this is the reason why. And so markets are going to react to that in different ways. And look, GDP is quite strong. Scott Bessent has said that the deficit has a 5 in front of it, 5.9 I think it is. They're bringing the deficit down through tariffs and other policies. It's working, and they're decentralizing and diversifying credit creation. The game is credit creation, and it's been central bank credit creation pretty much for, since the crisis, right? They're trying to take that away from the central bank a little bit. And the cycle feels different. The price action will be different, but credit creation is necessary nonetheless. The market is not overly optimistic. You can see that right here. To worry about tops is when the market is massively over optimistic. It certainly doesn't feel that way in crypto. Sharp ratios last 52 weeks. Look, gold and Bitcoin right up there. These change around, but look, wow, sharp ratio of 2.41 for Bitcoin is fantastic. You've got the S&P down here at 0.97, Ethereum at 1.05. You've got some other things in the middle, which is uninvestable, right? 60-40. Can you put money into China? Probably not. Even Mag 7 is 1.48. Bitcoin is 2.41. Correlations, gold very uncorrelated. Bitcoin just flips around, right? So look, Bitcoin is right up there in terms of risk-adjusted returns. This data is from Julian Bittel. You can just see clearly that a lot of the economic data, the real data, just doesn't show a market top, right? You can see the peaks here when freight index expenditures is very high. We're not overdone, right? We're not at the top of a cycle. Now, the other question is, well, do we have a cycle, right? Do we go up there? Maybe we don't, right? Maybe we just kind of have this bounce and then, it just doesn't work out. But of course, if economic data starts to come off, guess what happens? Much lower interest rates and money printing, right? The reaction to that is clear, right? But in terms of people calling tops, well, what you're calling for is essentially no top whatsoever and just a massive move into recession. doesn't feel that way if we're going into a cutting cycle. That's what they're worried about anyway, right? That's the whole point. They're trying to actually push the economic data up. The whole point is they want economic data higher. They want inflation, right? Private jobs data not peaking. It's not a top. Household loan survey. A credit cycle is super important, and it's not peaking. You can see that. So the market is not going to top at exact same time as all these cycles, right? But if you're nowhere near it, you could have another major move upwards. And it looks like that's going to have to take longer than usual, right? Like, we're not peaking out right now. The obviously downside to this is if we just don't top out, right? That was it. And then we just go into this huge kind of depression. But why would we do that if all central banks pretty much are easing right now? Why would you go into a depression if all central banks are on the easier side of things? Net percentage of banks reporting stronger demand for loans, that's actually on the uptick, right? So what pushes us higher again is the credit cycle really picking up and the economic cycle, the ISM picking up. And that can't happen specifically until the actual interest rates on the low end come down. They're not. The stock market can try and price that in, but until credit actually is easier, then you can't get a pickup in actual loan creation, which feeds through into ISMs and everything else. So yeah, it doesn't feel like a top from the economic cycle standpoint. This chart here from Drew and Timmer as well shows economic cycles essentially, and stock market cycles, which is if the stock market believes that there's going to be a growth in earnings per share of stocks, then they will buy stocks and push up the price. Now, why do you think earnings per share will increase? It's because there's more currency around to earn. You cannot earn more currency per share if the amount of currency in the world is decreasing. It's impossible, right? There's an amount of currency in the world to earn. If that goes down, then the S&P 500, a broad index, is not going to earn more currency per share. If the market believes that there will be a credit creation boom, either from the natural free market from banks, or if the Fed is going to print money, then everyone knows that the amount of currency in circulation is going to increase, which means that stocks are going to increase the amount of that currency they earn per share. Given that the amount of shares in existence may stay roughly the same, and there's more currency, you're going to earn more currency per share. It's not that they're more profitable, it's just that there is more currency per share. This is how the stock market prices in inflation in the currency or debasement of the currency, right? So what you usually get is you get a big growth in the price to earnings as the market front runs that currency creation. You get a spike here in pink most of the time to front run the extra earnings per share that come from extra currency creation. Then after that, the actual earnings per share catch up. As we see that data come through, the currency is created, there's more currency to earn, and that's what they do. So you get a spike in pink, the free market, the stock market front running that, then the earnings per share actually happen and catch up, and you get the price to earnings falling, the earnings per share growing. Even though prices can rise, the earnings per share grows, right? So you can clearly see that pink tends to front run blue. So pink here front runs, and everyone's saying the market's topped, price to earnings are too high. But then the actual credit creation comes and actually drags down those price to earnings, right? And you're seeing that here as well. So it also typically shows us that the price to earnings, right? If earnings are growing, prices can grow too. But if earnings are growing a little bit faster, actual earnings, then the price to earnings can come down a little bit. If you look at, people saying it's like 1999 and there's a huge bubble. No, even Nvidia is very highly valued, but it's not like the tech stocks were back in the day. All of these companies are highly valued, but they're actually massive tech monopolies earning between them hundreds of billions to trillions of dollars, right? That's not like it was in 99. I just don't, I don't agree with calls for huge depressions or massive blow off tops or like we're totally overvalued. No, these are profitable companies. The only one potentially is like OpenAI, which isn't even public yet, right? The others are just extremely profitable companies which are spending down some of their reserves and still earning money. And the rest of the market can catch up by increasing earnings per share as currency is created. But what they really need to do is create that currency. Now, the central bank's not playing ball. They're not doing it. Maybe they do when they switch out Jerome Powell. But for right now, you're relying on treasury games and very slow deregulation, which they want to happen. But obviously that's not happening now. That may happen next couple of years. Monetary policy, the market is expecting rates to come down to 2.5%, 2.5%. Okay, is that going to happen? We don't know, but the market can front run this, but the credit creation boom cannot happen until the rates actually are lower. You can see here, this is the difference between what the Fed holds and the fiscal debt. They have to try and sort this out. The Fed's not playing ball, right? They're too worried about inflation. They don't want to print money. That's fine. What we need is the money to be printed. The only other actor in the economy that can actually print this money is the banks. And so they need the banks to start creating more currency. But the problem is there's lots of rules around the banks to say that they can't do that. So that's why the Treasury is going to change the rules. The purpose of Dodd-Frank was to end too big to fail, but it ended up creating too small to succeed. The time has come for a community bank comeback. They need credit creation. The Fed isn't playing ball, so they need community banks to do that. Diversification of credit creation, decentralization of credit creation. That's a good thing. They're making good policies here. It's not perfect, right? But these are good, sensible policies actually. After the centralization after 2008, you basically had a centralized state actor saying, no banks, we're going to roll everything up into 5 or 6 major, essentially state-controlled banks because everything's regulated, no competition. We're going to tell them exactly what to do. Right? We're going to control the media and put pressure on them to silence dissent. And we're going to have the Fed, this big central bank, printing all the money. These guys are trying to decentralize that and diversify that. It's a different cycle. I think they're on the right track, but obviously, it's a very complicated situation. Look, we were promised a Bitcoin strategic reserve, and we've got an Argentine peso reserve. Look, to that end, today we directly purchased Argentine pesos. It is what it is. All right, this is geopolitics and trade wars with rivals, and you need to have influence over certain other countries. Brazil's part of BRICS. You need Argentina to be part of the other side. So that's what they're doing. They're essentially, I wouldn't call it a bailout, but essentially, right? And buying pesos, swap lines, trying to get access to resources in the ground in Argentina and having them part of that trade block. Fair enough. They're not going to buy Bitcoin anytime soon, that's for sure, but it is what it is. Credit cycles, you can see here, halfway through maybe. The credit cycle can't boom higher unless interest rates come down, and they are coming down, so let's see. Manufacturing cycles, again, not a manufacturing cycle boom. A lot of the economic data shows that we are recovering, but nowhere near highs that we were in previous cycles. Of course, we may not get to the highs in previous cycles. That just may not happen, right? So we may have just a very bad low cycle. I don't think so. They're deregulating banks. They're trying to create credit from those banks and from other banks. They're trying to deregulate generally. Tax cuts coming through the BBB. Economic activity, huge boom. So maybe it's a different cycle, and maybe it's a bit longer than the other ones. Is there going to be a boom in the economic data? Well, they're trying their best to create it, right? So if the most powerful government and economy in the world is trying their best to do that, maybe they can succeed. You can see MBRV here. It's just the volatility to the upside is very low. It's very slow and steady. So it doesn't feel like those big tops where you just really have to sell stuff. If you trade crypto, Bybit deposit bonus down below up to 30,000. You can trade on Apex as well. You get a fee discount by that link in the description if you can't trade on Bybit. I'm James, this is my ZG. Cheers for watching, and I'll see you in the next one.